Hi everyone, welcome back to Corporate Decoder. Today we are diving into Global Payments' latest filing. Get ready because it involves a lot of money and a deal that could make or break them. Spoiler alert, it involves Worldpay. In this report, we will break down Global Payments' new credit agreement and what it means for their big acquisition. We are talking billions of dollars, shifting debt and a high-stakes gamble on the future of payment processing. If you appreciate getting straight insights from corporate documents, make sure you are subscribed. We also have a Discord community linked in the description below where you can discuss these topics with fellow investors. Let's jump right into it. This is a Form 8K filing, which companies use to report major events that could affect investors. This particular one is all about a new credit agreement. The most important date here is May 15, 2025. This is when Global Payments entered into this new credit agreement. Think of it like signing a massive loan deal. This agreement involves Global Payments, some of its smaller, wholly owned companies that are acting as borrowers, Bank of America acting as the main manager, and a group of other banks acting as lenders providing the money. This agreement is called a revolving credit agreement. It is basically a line of credit that Global Payments can borrow from, repay and borrow again as needed, like a giant credit card for the company. The agreement gives them access to a $7.25 billion credit line, which is called the Revolving Credit Facility. However, only $5.75 billion of that is available when they finalize their planned purchase of Worldpay Holdco LLC. So the deal depends on getting Worldpay. Also, the total amount could potentially increase to $7.5 billion Daniel in total, $billion in total. This is where things get interesting. The deal to get Worldpay is a big deal for Global Payments. It looks like this credit facility, this credit line, is critical to making that acquisition happen. It is subject to some conditions that have to be met for the money to actually be available. All other usual loans will be subject to the usual approval conditions. This credit facility, this line of credit, lasts for 5 years from May 15, 2025. They also have the option to extend it for 2 additional years, 1 year at a time. Global Payments is guaranteeing any loans taken out by its smaller subsidiary companies using this credit facility. They are on the hook if those smaller companies can't pay it back. Global Payments can repay this credit facility early without having to pay any extra fees or penalties. Of course, they do have to give the lenders some advance notice and cover some usual expenses the lenders might have. Global Payments can borrow money under this agreement in different currencies, not just US dollars. They can use euros, British pounds, Canadian dollars, and potentially other currencies as well. The interest rate on the money they borrow will depend on a few things. It could be based on a secured overnight financing rate or an alternative currency term rate, plus a margin which is an additional percentage. For US dollar borrowings, it could be based on a base rate or a daily floating secured overnight financing rate. Again, plus a margin. The exact margin, that percentage, depends on Global Payments' credit rating, but it starts at 1.375%. This credit agreement has some standard requirements called covenants. These include things like maintaining a certain level of financial health, measured by their net leverage ratio, which is a measure of their debt compared to their earnings. If they break these rules, the lenders could demand immediate repayment of the entire loan. This new agreement replaces Global Payments' old credit agreement from August 2022. If you want to read the full legal details, you can find the complete revolving credit agreement attached as Exhibit 10. Because this new credit agreement creates a direct financial obligation for Global Payments, the filing includes this information. Here's another important detail. Global Payments had also arranged a bridge loan to help finance the Worldpay acquisition. This was meant to be a short-term loan to bridge the gap until they could get longer-term financing. Originally, this bridge loan was for up to $7.7 billion, but because they now have this new credit agreement, they have reduced the amount of the bridge loan down to $620 billion. Here is a list of exhibits, including the main credit agreement we just discussed. Okay, let's step back and look at the big picture. Global Payments is making a huge bet on acquiring Worldpay. To do this, they have secured a massive $7.25 billion Worldpay. To do this, they have secured a massive $7 credit facility with the option to increase it even further. This allows them to reduce their reliance on a short-term bridge loan. The success of this strategy hinges on a few key factors. First, they need to actually close the Worldpay acquisition. Second, they need to manage their debt carefully to avoid violating the terms of the credit agreement. Third, they need to successfully integrate Worldpay into their existing business and generate enough profit to justify the massive investment. What could go wrong? Well, the acquisition could fall through. the integration of Worldpay could be more difficult and expensive than expected, or the overall economy could weaken, hurting their business and making it harder to repay their debts. Overall, this move shows that Global Payments is confident in their ability to grow and compete in the payments processing industry. However, it also introduces significant risk. They are taking on a lot of debt and they need everything to go according to plan in order for this deal to pay off. Alright, that's our breakdown of Global Payments' latest filing. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.